My name is Adrian Valente, and we're going to talk about how you can help more patients get the dental care they need by embracing some of the latest methodologies in how and when to offer patient financing. When it comes to having these tough conversations, there's a lot of baggage that comes around when you talk about financing, both personally and professionally. So, a lot of practices struggle with the language they use or the different patient touch points they have to mention the financing options that are available. So, with that, we're going to actually take some time to go through those methodologies together. Before we do, I'll go ahead and introduce myself real quick. My name is Adrian Valente. I'm the Director of Training and Enablement for Sunbit. I've spent the last 6+ years developing training programs and experiences based on this topic of consumer financing. How do we talk about it? When do we bring it up? This current methodology we're going to go through together has actually been utilized by over 97,000 certified individuals on these program techniques. It's been taught in over 16 to 17,000 different locations around different local need-based industries such as dental care, veterinary care, optical care, and car service. Most of my time is actually spent doing this training in a variety of different channels. And a lot of my background actually started with enterprise technologies for higher education, back with PeopleSoft and Oracle. And then later I got bit by the startup bug and went to ChowNow and then Sunbit. But you can actually catch me as a recent guest on the Veterinary Innovation Podcast and a couple other things. But the goal here is to really identify ways to talk about complex topics simply. That's really what my career is built on. And lately, consumer financing has been the most fascinating because we too are consumers. We have also financed many things. It's such an ingrained part of our livelihoods, from the homes we live in to the cars we drive and the phones in our pockets. Financing is a big part of our way of life. And when it comes to dental care, it's even more important to understand why we need these tools. Because the number one problem that financing helps people with is also the number one reason why adults are skipping going to the dentist. And the big thing here is cost and the stress associated with that cost. It's reported that 59% of adults forego dental care due to cost. And when you look at all these reasons why folks aren't visiting their dentist more frequently, it's staggering when you look at the data behind the concern of cost and affordability. Now, before COVID started, it was reported that 40% of Americans were unable to cover a $800 or $400 emergency expense. But regardless, COVID changed everything. In fact, what happened was in January 2022, it was reported that 56% of Americans are unable to cover a $1,000 emergency expense, even with savings, making things such as unexpected dental care needs a hardship for a lot of folks. Now, in addition to the affordability crisis, behavior is also changing as well. People are moving away from older, more traditional financing and embracing newer ones. In fact, installment loans, which we do on financing vehicles and stuff, it's also something we've been doing for years with our smartphones. So not only are we seeing a big need from an affordability perspective, but we're also seeing a big need from a behavioral perspective. Because with COVID, the whole buy now, pay later payment option exploded in popularity. You can't go anywhere online nowadays without seeing one, if not multiple, buy now, pay later options at checkout, helping to simplify financing options for everyday folks. But local everyday needs are underserved. And when you think about dental care, a lot of these new hip financing options aren't as readily available in brick and mortar, but things are changing. What's making the discussion of financing so difficult for so many folks is all the baggage that comes with it. We have either had personal experiences where we have maybe been burned by banks and credit cards, and that stays with us, makes it hard to talk to other people about, maybe makes it difficult to look at financing options yourself, whether you're the patient or the person offering it. And it's because of the past It's because of these experiences we struggle. I mean, let's think about it. When we think about old school traditional financing, it's clunky. We're immediately thinking of lengthy applications with invasive questions. We're also thinking about those unnecessary hard credit checks that we're so afraid of because it dings your credit score. And so many options will do the hard credit check when you apply. And then there's a lot of declines, so if you're used to offering financing, 10 years ago, it's very different today. But because a lot of us have had bad experiences, it has fostered distrust. We are suspicious. We are skeptical. We're looking for those hidden rates. We're looking for those hidden fees. So if you're on the consumer end of things, it's difficult. If you're on the provider or the person offering financing, these are also the challenges we're dealing with. And in addition to this old school way of looking at financing, we also are dealing with challenges with the credit divide. The credit divide is looking at the difference between prime and super prime customers and subprime customers. So patients who have high enough credit scores get access to traditional financing. But what about everybody else? Now, these perceptions on financing impact how we offer. And understanding the credit divide further brings us to this point where, gosh, all this is really confusing. If you look at credit cards, when you look at online point of sale lending, when you look at unsecured loans, people on the higher end of the credit score spectrum have access to these things. And these are just typical APR ranges to just highlight what those options are. But what about the other end of the credit score spectrum? Well, this is where you find predatory options like payday loans, cash advances, auto title loans. Borderline criminal shouldn't even be legal. And yet for a lot of folks, this is the landscape. Now, why is there such a huge divide with these numbers, these segments of the population? A lot of people will argue, well, it's risk. People on the lower end of the credit score spectrum are risky, so things are more expensive. But there has to be a better way to do this. And this is why so many dental practices have multiple financing options to be able to broaden the spectrum of care to more folks. Because if one solution doesn't work for all, maybe we can have a few different solutions to give people options and choice. But the challenge is really understanding the differences between those financing options and ultimately how to talk about it. Now, this session is less about the technical nitty-gritty behind how these different financing options work and more on the soft skills of how do we actually discuss these options? How do we generate awareness? How do we leverage the tools in the toolbox from our financing providers to help patients get access to the care they need now and simply pay over time? An example I always like to talk about isn't actually related to dental. It's related to gas. Now, I'm from Southern California and grew up with ARCO gas stations. And you may be in a state that also has ARCO gas stations. Some of you may be in a state that doesn't have them. But what you know about ARCO is that in 1982, they stopped honoring credit cards. They had their own. In fact, they had this big commercial. They filmed out in the desert, and they blew up an ARCO credit card. They were doing this to try to save at least 3 cents per gallon at the pump. And 2 years later, in 1984, they started accepting bank cards, debit cards, but still no credit. And to this day, it has been this way. Growing up 80s and 90s, I would avoid ARCO gas stations because they didn't take credit cards. And for a lot of times, using a credit card was just more convenient for me. Maybe I didn't have the cash. And I'm not alone in this. So sure, ARCO was a little bit cheaper, but the inconvenience of not taking a credit card would steer people away. So imagine my surprise a couple of months ago when I'm driving down the freeway and I see a billboard from ARCO gas stations. And, those freeway billboards sometimes have very cheeky taglines and stuff. And this was just like that. It said, "Are you seated? Good. We now take credit cards." I was blown away. I was like, what? This is ARCO gas stations. They've always done debit only. Why would they do this? And I go to check their website. Here's a screenshot now accepting credit cards. They're making a big deal about this. And it's not even the fact that they're promoting like a branded credit card. They're just accepting it as a payment method. So then I always ask this in training. Why, after 40 years, would they let you know you can pay with a credit card? Because we've been conditioned as consumers to know that some businesses don't take credit. So the ones that change have to make a big deal generating awareness so people understand that, hey, we have another payment option. You don't have to pay with cash. You can pay with a credit card. And when I ask people why would they do this, I hear all these answers like, oh, well, maybe the customer would just prefer it. Okay, yeah. Maybe it's more convenient for them. Maybe they don't have the cash on them at the time and a credit card would be better. Oh, great. That's a good answer. Oh, maybe they get points or some other rewards for the card. And for them, there's an incentive. Oh, that's also a good outlook. But what's interesting is that there are many reasons why a person may choose one payment method over the other. And that's their choice. Our job is really to generate awareness. So in a survey that Sundid did, there's some really interesting information. And one of the questions that was asked in this survey was, how often is financing offered to patients? Now, 30%, almost 31% said, well, they only offer financing when the patient asks for it. 26.7% said, well, if the patient treatment is not fully covered by insurance, then we're going to offer financing. Only 15% offer it to every patient every time. Now, 13.83% said, well, I only offer financing dependent on the treatment price. If I feel that the price is high, I will then offer financing. And then you have another segment of offices and folks where 13.6% are saying, well, we never offer financing. At all. Maybe they have a stigma against it. Maybe they don't like the options they have. Maybe their only option is in-house payment plans, which are difficult to administer and perform collections on. Some of you that do in-house payment plans or have done that in the past know the challenges associated with it. That's why you partner with third-party financing options to take care of the work. But what we're going to focus on is why it's so important to offer to every patient every time. So that 15% we see in red, they're the ones seeing the biggest positive impact to case acceptance and production because they've embraced the methodology of generating awareness with every single patient, making sure everybody knows what their options are. But looking at this for today, there's a lot of folks out there either cherry picking whom to offer financing to, which presents some legal challenges, and we'll cover that too. But we need to understand why are so many offices, why are so many different team members approaching how to offer financing differently? And yet the proof is in the numbers. When surveyed, it's found that, without financing, case acceptance rate hovers at around 50.3% nationwide. And when financing is introduced into the mix, case acceptance rate jumps to 78.8% on average. So by providing people these options, whether they use it or not, if you're offering it to everybody, you're impacting case acceptance, you're impacting production, all in a positive way. So when you think about case acceptance, when you think about folks saying yes to the treatment recommendations being made to them, we got to help them out by giving them options. So how do you let people know that you have options? Sometimes I get asked, well, Adrian, I don't want to offend anyone. I don't want to make it seem like, oh, I'm offering financing because I think they can't afford it. But that's the challenge right there. If you have the tone or the inner belief that the person sitting across from you can't afford it, it comes across that way. So you got to think less about affordability and more about options. So keep it simple. A great way to segue into your financing options is with a very simple sentence. You don't have to pay for everything today. Here, I can show you. And then present your tools, present those options. Let folks know what they have access to. Of course, you can pay out of pocket cash or with a credit card or debit card, sure, but we have other financing options that you can apply for here. Now, the key to this is getting ahead of the cost conversation. You see, when you present financing options early, it gives patients an opportunity to plan and budget for your treatment recommendations. It helps to alleviate stress because you're presenting these things up front. You're treating it like an amenity, like a convenience for folks. This really helps to prevent awkward conversations later in the appointment. So perhaps after meeting with the doctor or treatment coordinator sitting down with the patient. And if you have been generating awareness about your options leading up to this point, it's a much more warm conversation as opposed to coming at it cold where it hasn't been talked about. There's been no awareness generated at all. And now we're only waiting until we talk about cost. Oh, you can't pay for that today. Oh, let's talk about financing. Now I feel like a used car salesperson. And that's where people feel icky because we're only waiting until the moment of cost, right? We're going to talk about a dollar amount. Oh, now we get to talk about these options. But the key is if you can bring it up early with every single patient every time, it's not only going to help with affordability, right? Accepting all the recommendations you and your team is making, it's going to provide more value. Help that patient maintain treatment compliance. Even if they can't afford the full treatment recommendations now, can we at least help them get started? Can we approach this in a staged or phased approach? And at the end of the day, people that have the cash on hand, even they appreciate having the option. Because let's say I had all the cash on hand for the treatment right now, and sure, I could spend it all, but we don't know that person's financial background or details or needs. How do we know they're not earmarking that for something else? Especially, when you talk about certain parts of the year, like the holidays or benefits expiring at the end of the year or all this other stuff, there are plenty of reasons why people may want to hold on to their cash and may prefer an option like financing to help give them a bit of breathing room. So offer it early and often. If you are waiting for objections, it becomes very awkward. It feels pushy. It feels salesy. And this is where a lot of folks struggle. They don't feel comfortable bringing this up because, if I actually had a manager once tell me that they were afraid of this because whenever they would mention financing, the patient would get offended. And I'm going, gee, I mean, I understand that concern. And I'll ask, so what are you saying? Tell me the words you're using. And I often hear something like this. Well, I mention our treatment recommendations. I go through everything and then I get to a dollar amount. And as soon as I mention the cost, I'll say, by the way, if you can't afford it, we have financing. Oof. Yeah, that is tough. If I was a patient, I wouldn't like hearing that either, because that simple phrase is loaded with a lot of assumptions. And that's where emotion comes into play. Paying for treatment is stressful. Presenting options to the patient can be stressful. But if you're only having that conversation at this moment when there's an objection, it's very hard to come back from it. So when you offer it up front, when you do it early and often for every patient, it just becomes part of your office culture. Think about it like when you have your car serviced. You have a car, you take it to the dealership for some routine maintenance, and what do they offer you? Oh, there's Wi-Fi in the lounge. Oh, there's coffee and some muffins. Hey, do you need a ride home? We have shuttle service, or maybe we can call you a Lyft or an Uber. Oh, we have text message updates on the status of your vehicle. These are all amenities and conveniences to make your stay better. And when you look at your financing options, it's the same thing. It's an amenity, a convenience that some other offices may not have, but you do. When my car service advisor offers me shuttle service, I don't get offended. I don't sit there going, how dare you assume I don't have a ride? No, if you have the tone of convenience, it comes across that way. So when you offer your financing tools, there's a lot of different patient touch points you can leverage. If you have options that have a pre-qualification link or option that you can share with people, use that before the appointment. It often helps people to plan and budget ahead of time before they even step foot in your office. Or when you have folks checking in and they're hanging out in the lobby or the lounge, or you're verifying insurance coverage. These are great opportunities to pre-qualify people on their options before they actually walk into their appointment. And then they're armed with that information. I even have some offices where the doctor will actually help to generate awareness in the chair. Well, they'll just let folks know, hey, by the way, we do have these options available. I'm sure our staff will mention more about it, but if you have any questions, please let us know. And then you have treatment coordinators who are leveraging the consultation to actually go through and review those options together. So if you have links or devices or any tools that you can share, even if it's just a pamphlet, being able to show something palpable is very, very powerful. It's a good motivator for folks. If you plant the seeds early and often and you leverage everything that's in the toolbox from your financing partners, you would be surprised how much it's going to move the needle. But you got to use the stuff you're given, especially pre-qualification links or options. That's a very, very powerful thing. I talk to some very successful practices where office managers will tell me, oh yeah, we'll look at all our appointments for the next day or and we'll send out notifications. Maybe you have a site, a page on your website where you list your financing options. You can link to that page in a lot of the templates you utilize for appointment reminders, for check-in, for missed appointments. There's a lot of communications outside the office in which you can generate awareness too. But let's actually review some talk tracks. Let's go through some actual scenarios and how you can weave your financing options into the conversation. So let's start at check-in. How do you plant the seeds when someone is checking in for the appointment? Again, treat it like an amenity. In fact, you can treat it like it's new. Even if you've had options for a long time, if you've never really talked about it before, it could be new for that person. You may have had a patient that's been coming to you for years, but maybe this has just never come up before. You might have plenty of patients where they get the basics done all the time, but anything extra, no chance. You've tried to have that conversation before. But let's inject some energy in there. So when people are checking in, hey, by the way, we do have some options for you to split any out-of-pocket expenses today. Let me know if you'd like to learn more. I can show you how it works. We're not even getting into technical specifics at this point. We're really just letting people know, hey, we have options for you to split any expenses today. So if there's anything you owe out of pocket, just let us know. You can either pay it all at once or pay over time. Notice I'm using very simple language. I'm not even listing specific names or vendors or technical stuff. I just want to generate awareness in a very simple way. This is how you start, right? Because, hey, if they're not interested, cool. You did your part. You generated awareness. And that's really a big thing we have to do for everybody, right? Whether or not it makes sense to them, up to them, but that's okay. And hey, if they want to learn more, they'll ask you. And if you're checking in an insurance patient, this is also an excellent way to help with that process, because as you're verifying coverage, sometimes there's a little bit of a delay or some lag, and you're always, maybe struggling for what to talk about during that downtime. Well, hey, you have some options you can talk about. Say, while I verify your insurance coverage, by the way, if there's any out-of-pocket expenses today, I'm just happy to show you what our options are. And this is a good opportunity to share pre-qualification links or pre-qualification options with folks through the devices you have, or by leveraging a pamphlet or any marketing materials that you have in your lounge pointing out to something. Maybe you have a pop-up tabletop sign or a table tent or a poster or a pamphlet you can give out. Anything that's tangible will work very well with generating awareness. So again, during check-in, and with verifying insurance, before we even step foot in the operatory, we're here in the lounge. We can actually knock out quite a bit when it comes to generating awareness. Now, when it comes to consultations from the doctor, as you go through recommendations, this is where we're getting into very sensitive territory, because we're talking about costs. We're talking about spending money. And with this conversation comes a lot of stress. You have people that are afraid of, what would happen if I don't do this treatment? If I do the treatment and I take them on the recommendations, how am I going to pay for this? What am I going to use to pay for it? How will it impact other responsibilities I have, other bills I have, other due dates, the holidays, benefits expiring, the kids need that? It's overwhelming for a lot of folks. So how do you help alleviate stress? On the heels of the doctor's recommendations, and on the heels of talking about a dollar amount, so it's going to, it looks like it'll be this much money. By the way, you don't have to pay for all that today. We can actually split this up for you. If you'd like to learn more, here, I'll show you. And a lot of our financing partners have some pretty cool tools to make it even easier for patients to review their options. Maybe there's like a monthly payment estimator or something, or a pre-qualification link, or maybe you have a device or your computer screen or something where you can pull up the application and review it together. Looking at financing options in this instance is a two-player experience. You are both invested in reviewing options to help them say yes to the recommendations from the doctor, right? So this is a powerful thing because you're offering something that other offices in your area may not have. There's a reason why you have financing options. If you didn't have any, a lot of people would walk away without getting the dental treatment they need. But if you're not offering it to everybody, how do we know who you're missing out on? So as we go through these talk tracks, really think about and consider that simple language and those touch points along the journey in which we can let folks know, hey, you're not in this alone to figure out how to pay for it. That's why we've partnered with financing providers to give people options. Now, a lot of times I'm often asked, well, Adrian, what about discount requests? I got a lot of folks asking me, hey, is there anything you can do in discounting what you're recommending? Sure. I always recommend keeping it positive. Try to avoid using any negative language. So when responding to a discount request, try to avoid saying things like, oh, we don't do that, or, oh, I can't, or, oh, I'm sorry, that's not something we do. That's disappointing, both to deliver and to hear. So keep it positive. So if somebody goes, hey, is there anything you can do at the cost? Is there like some discounting option? Well, the good news is you don't have to pay for all of this at once. We can actually split this up for you over time. And we can help you find the option that works best for you and your budget. Let me show you. And again, always going back to something tangible. The quicker you can get to the tools, the better. Because as much as you want to talk about it, it's better to show it. And a lot of these financing providers have gotten so much better at making it easier to look at something, to pre-qualify, to quickly get approved. More options are moving towards doing soft credit checks up front, where applying for financing doesn't result in a hard check as much as it used to. So that's why it's always important to know which of your financing options do what. So whether it's checking in, verifying insurance, going through the doctor's recommendation and consultation after being in the operatory, or discussing conversations around discount requests, remember to always keep it positive and succinct and get to the tools as fast as you can so people can actually get hands-on with your options. And remember, your financing tools are not just for major treatments. We have a lot of offices out there that are using their financing options to help patients split their bill into small payments for things like fillings, routine extractions, or root canals. So if you're sitting there thinking, well, I only offer financing for major treatments, then you're probably missing out on quite a lot. A lot of the financing options out there have very low minimum purchase requirements. Some could be as low as $60 or $200 or what have you. But that's why, again, it's important to know what options you have and what their minimums are, their maximums, what their APR range looks like, whether or not they do soft credit checks or hard credit checks. And as you present options to folks, you have a good understanding for how to answer any questions and concerns. But the methodology of every patient every time, the methodology of being able to leverage various patient touch points to bring it up early and often, to warm people up to the conversation for once we get down to the consultation and actually pulling the trigger on saying yes to treatment, can we help? And I want to show you a case study from a particular office that embraced this methodology with their financing options and what it did for them. So we're looking at a 2-week snapshot from a team at Smiles West, where we have a treatment coordinator and an office manager working together to generate awareness, kind of front of house, back of house approach, which I really like. And when they started offering financing up front, as well as every patient every time, they saw some very interesting things in their data. First, I'll point out that in that 2-week snapshot, they generated incremental production of over $62,000 between 2 staff members over a 2-week period of time with no new patients, existing scheduled appointments. Now, what was even more interesting that surprised them was the average production amount for each financed transaction. It was lower than they thought it was going to be because, again, people think that, oh, financing's for the big stuff. But then if you offer it for everybody, for everything, you'd be surprised how the average changes. So this methodology is very interesting, right? It also resulted in much higher approval rates. Well, that's weird because we always hear stories for, oh, well, my financing options aren't really approving as many people as we'd like. So this is you got to have a tough conversation with yourself when this is happening. If your approval rates are low, ask yourself, Are you only offering financing to the people you think need it? Because then you're pegging a specific segment of your patient population. If you start opening it up to everybody from all walks of life, from all credit backgrounds, of all credit scores, the averages go up because now you're including people normally you wouldn't offer it to. And it's surprising how those folks, the people you normally think like, oh, I don't need to offer this to them. But once you do, how that changes the conversation. And in addition to high approval rates and surprising average production amounts based on these financed transactions, conversion rate is very interesting because if you look at of all the times you are approving people, so you're having people apply through your solutions, they get approved, you approve more people convert and use it, right? So you start to see higher approval rates, higher conversion rates, thus resulting in higher case acceptance rates, more production. If you're struggling to increase production for your practice and it's a challenge to bring in more new people, how can you help your existing patient base do more? We got to get smarter about how we leverage our financing options, how we generate awareness, and how we present it to folks. Now, to prove a point here, there was a survey of these patients. So we saw this 2-week snapshot, right? Now, in asking those folks, well, would you have completed the treatment if you didn't use financing? A whopping 72% said no, that they would have walked away. They would not have been able to complete the treatment without having a financing option. That's lost production right there. Now, interestingly enough, only 12% said, well, they would have done part of the treatment anyways. They just would have, done pieces of it, maybe not the full treatment, but financing helped them do more. And this one I always get a kick out of. 16% said, well, they would have done the treatment anyways. They would have just paid cash or credit out of pocket, whatever was in their wallet. They just preferred the financing options being presented to them. So sure, they were prepared to pay cash or with their own credit card in their wallet, but then all of a sudden they see these other options, gives them a little bit of breathing room, helps them hold on to their cash a bit. So they just preferred it. So again, I ask, if you're not offering your financing options to every patient every time, what are you missing out on? Because the data shows us it's quite compelling. So if you're sitting there going, well, okay, I'm understanding that, if I want to try changing things, I got to really be good about offering to every patient every time, early and often. I'm seeing the data, I'm seeing the case studies. So, maybe I want to help my team. Maybe it is a team effort. It's not just me. Success doesn't happen in a vacuum. How can you set goals? This is also something I work with a lot of offices. And I'm a big fan of starting simple. Let's say you just focus on 2 applications per day. So if all the patients coming through, of all the financing options you have, you got 2 applications per day. And what happens is the data shows us when you start offering to every person every time, a lot of times the conversion rate, at least at 50%, will show us that at least one of those will convert, right? So let's say you're working 22 days that month, and let's say the average production with financing is around $1,500, because like we're seeing, it's opening up this threshold for minor treatments as well. That's an easy $33,000 in incremental production per month based on simple goals. So imagine if you had 3 applications a day or 4 applications a day, what that starts to do for your bottom line. So again, keep it simple. Every person, every time. Leverage the tools your financing providers give you, especially if there are pre-qualification options. That's a very powerful motivator for folks to help them plan and budget appropriately for your treatment recommendations. But this is consumer financing, and there are some very important laws and legal compliance guidelines that we should cover together. And this also helps strengthen the methodology behind every patient every time. So a lot of people will assume that your financing applications are clunky, have a lot of invasive questions, or time consuming, but things have been changing. So if you have somebody say something like, oh, I don't have time for this, this is where you can leverage any tools they can take home. Maybe it's marketing materials like a pamphlet. Maybe it's a pre-qualification link you can send them. Maybe it's information on your website. Perhaps you have a dedicated page for your financing options that they can go home with. I would say if you have a pre-qualification option that is the most powerful thing you can provide. Because if they don't have time to play with it now, they might have time later. So sure, no rush, no pressure. Here, let me provide you with something for you to check out on your own time. And then feel free to call us if you have any questions. Maybe make a note for a follow-up call, especially if they're not committing to their next appointment yet. This might be a great opportunity for an additional touch point, right? Now, another concern that often comes up is people who are afraid. Oftentimes you hear people saying things like, oh, I'm not going to qualify. Oh, I get declined on this kind of stuff all the time. And this is where you can share the information on how the application process works. Now, each financing option is a little bit different. Some will do a hard credit check to apply, where it dings your credit score. Other options will do a soft credit check upfront, so it doesn't ding your score to look at your options. But then some of those will stay a soft check the whole way through, and some of them will turn into a hard check at the end. So I encourage you to connect with your financing solutions, really understand the difference. And if you're trying to figure out which of my financing options to offer up front, especially when they have a concern like this, focus on the ones that do a soft credit check up front. Because at the end of the day, you just want to show people their approvals and what those options are. And you want to start with the ones that have the least amount of friction that won't impact them. So a lot of these tools have even gotten faster with higher approval rates. Technology is pretty amazing nowadays, and financing of today is not like it was in the early 90s. So embrace the technology and tools that your financing options provide you. Understand the difference on which ones do a soft check versus a hard credit check, and gain confidence and comfort knowing how to answer these by arming yourself with that information. With that, let's get into a few guidelines for legal and compliance. Because as we talk about credit checks, it's important to understand that there is a distinction between which financing options will have credit checks, whether it's a soft credit check or a hard credit check, but then the separate topic of credit reporting. See, sometimes people get confused. They see a financing option that says soft check to apply, but then you got to know, well, do they do a hard check to complete the transaction? That's important to know. Or there's an option where there's no hard credit check, right? So it's only a soft credit check. Nice, right? They can apply and take out that financing with no hard credit check at all. But there's a separate topic of credit reporting. Does that financing and the payment performance get reported to a major credit bureau? Because sometimes you'll hear from a patient a complaint like this. Oh, wait a minute, I did some financing that said there was no hard credit check or no impact to my credit to apply. Why is it showing up on a credit report? I thought it wasn't supposed to do that. Because even though there may not have been a hard credit check, if that financing and payment performance is reported to a credit bureau, that's important to know. And it's tricky because the way credit reporting works is different for everybody. All three bureaus don't publicly make available how exactly they score people or what that math looks like. So it's impossible to predict or forecast how an individual's financing performance will affect that individual's credit score. So you shouldn't make any credit building claims at all. Oh yeah, if you do this financing, it's going to boost your credit score. We don't really know that. How do you know that? You don't have access to all their financial information because there's a lot of variables at play when it comes to credit reporting. So that's why it's imperative that you understand what your finance options are doing. This is why the Truth in Lending Act is so important, to ensure that all those vendors and companies are being clear and transparent about their financing terms. So if you have pamphlets or marketing materials that relay all the financing details and information, rates and terms, any disclosures, the Truth in Lending Act makes sure that those vendors have to make that information available to you. So if you're sitting there going, wait, I don't have any pamphlets, I don't have any information, reach out to those financing vendors. If you have an account management team or support team, they can definitely get that over to you. So reach out to them, make sure, because hey, everybody needs to stay compliant with the Truth in Lending Act. So you got to have those materials readily available for folks to review. That's why it's so helpful if you're able to put this stuff on your website so it lives there and you can send people there. They're also welcome, especially if you have that and you link to either your pre-qualification options for those financing tools or you link to their web pages like an FAQ or question section that helps answer a lot of those concerns. So lots of different things you can do to maintain compliance. Now, if you have any financing options that require you to look at an ID, remember that state law dictates that you always have to check the ID to make sure it's the person presenting it to you. It has to match. You shouldn't move forward if someone's giving you an ID and it doesn't match. It could be some fraud there. So this is an important part, especially when we're checking IDs. And be honest and fair to everybody. Don't lie or misrepresent the financing details, and don't take advantage of a customer's misunderstanding. There's also something called the Equal Credit Opportunity Act to ensure that businesses don't discriminate against people for any reason whatsoever. Shouldn't be profiling or discriminating against folks. So this is also what plays into the methodology of every patient every time. Because if you're sitting there looking at someone going, oh, looks like they need financing, I'm going to offer it to them. No, that's illegal. You're profiling people. Same thing in the other direction. Ooh, look at that person. They look really wealthy. I'm not going to offer financing. They don't need it. That's illegal. You can't do that. You can't sit there and make judgments about whom to offer financing to. This is why the Target Corporation got in such big trouble years ago, and why nowadays they're so obnoxious about offering that red card to every customer every time. So when you think about, I'm going to offer financing to everybody, must be some sales tactic. It's actually a legal compliance guideline, right? You have to treat your payment methods equally as well. So you can't be jacking up the price for things just because somebody's using financing. If it's, $2,000 cash, $2,000 with any out-of-pocket payment method, but then all of a sudden, they're going to apply for financing. Now it's $3,000. That's illegal. You can't do that. There's actually only one industry that is legally allowed to charge you a different cash price from a credit card price. And if you could tell by our ARCO case study earlier, it is gas stations. They're the only industry legally allowed to do that. But I hope this was helpful. We covered a lot of great information on how to leverage financing options with every patient every time. Keep it simple. Let folks know you don't have to pay for everything today. And remember that case acceptance rate matters. If you're trying to move the needle or impact your bottom line, offer financing to everybody, and you'll see these numbers and KPIs go up and to the right. I want to thank our sponsors from Sunbit, providing Smile Now, pay over time technology to thousands of locations around the country. Their financing technology provides an 85% approval rate for all the folks using it to look at their options. It only takes a couple of seconds. There's no paperwork, there's no stress, no fees, no hard credit check, and flexible options that are customized for each and every patient, helping you increase case acceptance rates and production by providing clear, transparent, and healthy financing options for everyone, everywhere. But while we do that, I will answer a question that came up in a recent webinar I was hosting on this topic, which was, what happens if you have a patient who is buying a home? Should they still do financing? And really, this goes back to understanding which of your options are doing hard credit checks and report to credit bureaus, because this information is very important for people who are buying a home. If you're in the middle of escrow, you're told that, hey, put your financing on ice. Don't spend any of it. Don't apply for any new financing. Just leave it alone while we get through this process. So I always encourage dental practices, listen, if you have folks that are buying a home and they're on the fence, can the treatment wait until after they close on the home? It's not worth running the risk of either a hard credit check or that financing getting reported to a major credit bureau and possibly impacting that person's potential to own a home. So very sensitive subject. I'm glad that question comes up because it shows that a lot of practices are very sensitive to this and want to make sure they're doing right by their patients. There is a question, how is Sunbit different from CareCredit? Very simple. Sunbit technology provides access to simple interest installment loans, and CareCredit provides access to a credit card. So at the end of the day, it's a loan versus a credit card. That's the main difference between Sunbit and CareCredit. So very complementary to each other. Another question, what about people with terrible credit? This is why so many practices offer multiple financing options. They are, some don't approve as many as some other options. So if you have people, if you're dealing with somebody with terrible credit, I know that one of the things that's going to come up is that hard credit check, right? People with bad credit are especially sensitive to having a hard credit check when they apply for financing. So if you can at least show options that have a soft credit check up front or a soft credit check the whole way through, that's what you start with. Because even if somebody has bad credit and they get declined, well, a soft credit check didn't hurt. It didn't ding their score. So it's okay. If you can start with the option that's the fastest and has just a soft credit check, you may have more than one option that does a soft credit check. Wonderful. Because, hey, if one doesn't work, let's try another. And that's why it's really important to understand the differences with who does a hard credit check and who does credit reporting. So good question. Another question. If someone is in bankruptcy, can financing still be an option? Boy, that's really up to the risk assessment engines that power a lot of these financing options. So that's, again, going back to the recommendation I have of, hey, if you have a pre-qualification option that does a soft credit check, let's just see. Because if you have a financing option or options that do a soft credit check, hey, it doesn't hurt to take a look. And really, that's the point. So any concerns, whether it's, oh, hey, I just finished buying a house, or I am in the middle of bankruptcy, or I just got a new credit card a couple of weeks ago, or all these different things. Hey, you know what? Let's just see. Let's take a look. Let's let these solutions speak for themselves. So pre-qualification options are wonderful tools, especially if they do a soft credit check. I would definitely start there. Another question. How would you tell a hygienist to approach this once the patient is in the chair? So this is actually a pretty sensitive topic because there are some states that do have laws against bringing up financing while people are in the operatory. A lot of times there are consumer complaints where folks feel that they may be taken advantage of or under medication while they're in the chair. So presenting financing can be a challenge for a lot of the offices that are in states where there's laws against this. A good example, state of California, can't do financing in the chair. But I know there are a lot of small offices in other states where this isn't a problem. And, you don't have a treatment coordination office. So you have to do it in the operatory. But a hygienist, I would recommend bringing the options with you, right? Whether you're meeting them in the operatory or an office, depending on your state laws and what you need to adhere to, bringing those options, those tangible tools with you, whether it's a device that you have this on or marketing materials or a monthly payment example chart or calculator, anything. It could be as simple as a pamphlet. Bring it with you because as a hygienist, you're really trying to give people options, but you want to make it easy to access. So if you have it on hand, if you have it with you, so you're presenting it alongside your recommendations, it helps to eliminate a lot of the friction. Question, does Sunbit perform a hard credit check and report to credit? Yes, good question. So Sunbit does not perform a hard credit check at any point. The installment loans powered by Sunbit technology and the payment performance are reported to a major credit bureau. Another question, how many options do you recommend to have available to offer the patients? Boy, that's a good question. I never got that question before. How many should you have? I believe there can be too many. You don't want to have a dozen different financing options. I would say on average, I'm seeing between 3 to 4 financing options typically at a lot of offices. I don't see that in other industries like optical care. It's mostly dental. You have a few. You may have a credit card, a loan, or something else. Different, not only different financing options, but different types of financing. So I think 3 to 4 is pretty healthy. I know a lot of offices are moving towards cutting back and focusing on 1 or 2. But again, depending on what types of treatments you provide, you may have financing needs for significantly major treatments that are very expensive, that do require specialized financing. So I recommend, really look at your options, see which ones you're using and which ones there's a need for. And if you're looking to consolidate, definitely make sure you re-engage with each of your financing account management teams or support teams to learn more, because there may be tools you're not leveraging that may help with the usage of that tool or financing option. Another question, what options would you list for financing options on a form to present to patients? Yeah, Well, actually, this actually brings up something really interesting. So I was talking a little bit about having a page on your website that really outlines the different financing options you have, which could easily translate into maybe a one-page PDF or something you can print and have available as part of the treatment plan recommendations you're presenting. So on a form, for example, it's totally fine to actually have a section where you discuss, here are financing options. Are you interested in learning more or applying? And they can actually check on that form. Or you can use the back of the form or any space, an additional page where you can outline or put a comparison of your financing options. Like we have this one that's a loan, and this one that's a credit card, and this one does a soft check, and this one does, you can do a little table. I've seen a lot of practices do that, a lot of success with just being transparent. Put it on the website, put it on a form. So I really like that idea. Good question. What options would you list for your financing options on a form? Yeah, list what you have, but specify what kind of financing. Does it do a soft check or a hard check? Does it report to a major credit bureau? And where can they learn more? Maybe a website or a QR code. I know a lot of practices, they'll go through the effort of putting these options on their website, and then they will use a QR code and use it physically in the office so that people can access that page on their website very quickly. All great ideas. Another question. As a dental assistant, I noticed my dentist boss is committing fraudulent behavior on patients. What can I do to avoid this serious situation? Very good question. If you are noticing nefarious actors when it comes to your financing options, get in touch with that financing provider. They have procedures in place for exactly this type of stuff, because I know sometimes it can feel very threatening, especially based on this question. If it's your boss and, basically any kind of fraud, whether it's related to financing or not, like this is important, for the patient's well-being, this must be escalated somewhere. So if you don't know where to turn, contact the support team at your financing provider that this is happening with. I guarantee they have stuff in place to help you, to help your patient. Recourse that can be enacted on, but don't wait. Contact somebody. That's a very good question. Thanks for bringing that up. It's a shame to hear this kind of stuff. That's why we do this training. That's why legal compliance is a big part of it. Fraudulent behavior is an issue out there. If you don't feel good about something that's happening, you're suspicious, escalate it immediately to a support team for your financing vendors, and they'll help you out. Another question. We accept Visas and MasterCards, but our doctors want us to add 3% as a surcharge on top of the patient's copay. Is that legal? So what's interesting is, a lot of fees and stuff should be calculated into the costs. Now, if you are assigning fees based on certain payment types, now I know, you'll go to a store and you'll pay with a debit card, and a lot of times you'll have like, a 35-cent debit card fee that's passed on to you. So that's a little different because it's not a financing solution. So what happens is when people are paying with a credit card or they're applying for financing and you are charging a different dollar amount, that could be legally murky. You have an issue where someone could claim discrimination, that because they are using a different payment method than what you would like, they're being penalized for it. Some states have very strict laws about this stuff. So that's why whenever I teach this, I say, listen, if you can factor that cost into the pricing, or if your margins are fine and that 3% surcharge, if you're really fighting for that 3%, there's a cost to doing financing. Either you don't offer financing at all and you miss out on all the production you could be generating. You have patients not able to get what they need because they have no other options than fending for themselves with whatever's in their pocket. So by presenting options, but we have to do it in a fair way, right? We don't want, and some people sit there going, oh, well, having a financing option costs me money. Well, yeah, there's inherent risk associated with financing, but the amount of production you generate will cover that in the blink of an eye. So when you think about that 3%, is it worth possibly being seen as a discriminatory practice? In my eyes, no. No, I don't recommend that. Knowing that there are some state laws very strict about that, not knowing exactly what location you are at, but it does present some legal issues. Another question, how long for a pre-qualification to happen? It actually varies. Most financing options, their pre-qualifications are instant, taking just seconds. So we see a lot of practices, they have all these different financing options. And the whole point of pre-qualification is to let people quickly see their options. So it really shouldn't be taking that long. Honestly, if you're noticing that it's taken a long time with some of your providers, I would contact their support teams. There might be something wrong where there's a delay in getting pre-qualification answers, but it should be happening very quickly. Another question, how common is in-house financing? More common than you'd think. I see this with all sorts of businesses, not just dental practices, but it's an old school way of allowing people some breathing room. Sure, we'll do payment plans, but from an administrative perspective, it's very difficult to maintain and also to do collections on that stuff. So that's why you have a lot of practices have moved away from in-house financing and partnered with third-party vendors to take care of all that for them, not just taking on the risk, but also handling all of the communications, the collections efforts, all that stuff. It's nice to have a financing option that takes care of all the hard work for you. You pay the fee and they're taking on the risk. They're taking on the communications and all that work. You're paying for a big organization to handle that for you. So now I don't know, I can't speak to any specific options on what their soft check and hard check qualifications are, whether or not they do them. I know that some options will do a soft credit check to apply or a hard credit check to complete. That's why I recommend you got to check, because this stuff is also changing very quickly. A lot of solutions are adapting to modern times. They're seeing what's happening with online e-commerce and buy now, pay later, and they're adapting their financing options to meet the needs of the consumer public. So always check. You'd be surprised. Some solutions I think are stuck in old times have adapted. So always check. You never know. What could be a way of doing things today may change 6 months from now. Last question as we wrap up with time. What are the most common financing options that dental offices offer? Lots of solutions out there. With Care Credit and Sunbit and GreenSky, a whole bunch. There's so many, I probably don't remember them all at this point. If you want to learn more about those options, I definitely recommend, talking to some of your peers. And things are changing. In the past 6 years, I've watched a lot of volatility in this market with companies that are coming and going, advancements being made much faster than ever before, a lot of evolution happening with existing financing options. It's a very interesting time for patient financing, and the options are changing rapidly. So make sure that you're staying up to date with your peers, especially if you're part of a group or work with other offices. Go to any learning events, conferences, trade shows, talk to people. Don't just take my word for it, because what we could be using today will definitely change in 6 months to a year. And a lot of solutions are quickly adapting and adding more tools all the time. I can't tell you how many folks with their existing financing options have gotten back in touch with those companies and learned about a lot of the new stuff they're doing, product updates, evolution to the assets and collateral they have available that you can utilize to generate awareness. But if you have any more questions, hopefully you can catch me at another event. We are now at time, so we're going to wrap things up. Again, thank you to everyone at Viva Learning and Sunbit for co-sponsoring this event. And I hope you learned a lot when it comes to case acceptance essentials, how and when to offer patient financing. My name is Adrian Valente, and thank you so much for your time.